I'm Jessica Minton for IB Times TV, reporting from the floor of the New York Stock Exchange, where Wall Street edged up today after jobless claims fell again to a 5-year low, and also on positive manufacturing data. Kenny Polcari from O'Neil Securities will be speaking with us about the positive manufacturing data out of China, the U.S., and the Eurozone, and what this means for going into 2013. Manufacturing in China and the United States grew this month at the fastest pace in about 2 years. HSBC said its flash index of purchasing manager sentiment for China rose to 51.9 in January from December's final reading of 51.5, while U.S. manufacturing hit its highest since March 2011 at 56.1. The surveys released on Thursday indicate that the world economy may be gaining traction after a sluggish 2012. Manufacturing in China and the U.S. did particularly well with the surveys that came out today. Do you foresee manufacturing continuing to expand in 2013?
Well, listen, I think we certainly have to see it continue to expand. I think the first half of 2013 is going to continue to be kind of this slow growth or this slow return. But I do think that the second half of 2013 is going to actually produce a number of things. I think the economy is going to start to feel better. I do think manufacturing will pick up. Maybe I'm being optimistic, but I am cautiously optimistic that manufacturing will pick up. Here in the States, but as well as we're starting to see better news coming out of manufacturing around the world. Certainly in Germany also. China was a big thing this morning. They were very happy about that. And over here, today's market preliminary PMI was actually much stronger even than they expected. So that's all positive, right? And so we're going in the right direction.
Data suggesting German growth picked up boosted hopes for a swifter Eurozone recovery. Markets' flash composite Eurozone Purchasing Managers Index jumped more than expected to 48.2 from December's 47.2. The PMI data from Germany, which is Europe's largest economy, suggested it grew at its fastest pace in a year, while in France, business activity slowed. But the surveys show that the pace of contraction in the Eurozone is slowing, and that conditions may be improving for Europe. And as you mentioned, surveys also showed positive news coming out of Germany. Is it at all possible for a return to growth happen for the first half of 2013 over there?
Well, when you talk about the Eurozone, right? So the Eurozone, what was interesting, what happened this morning, was that the total Eurozone PMI number was still negative. It's below 50, although it is moving up, but it is still below 50, and that was because some of the individual countries are seeing contraction, right? Germany, on the other hand, actually showed some real strength, and so what I think you're going to see there is, I think you're going to see continued struggle. I think the worst for Europe is over in terms of recession. It's certainly not imploding the way it was a year ago. A year ago, we would have thought that, the whole place was going to implode. Germany, Greece was out, and Spain was on the edge, and France was on the edge. We don't see that at all anymore, so in fact, that's good, right? I'd like to see Germany be the lead in terms of manufacturing, and then hopefully the other countries, we'll start to see a turnaround in them. I think, though, that the consensus really is that Europe, in the Eurozone, is going to continue to struggle this year, but there is, I think, a light towards the end of the tunnel.
Data released on Friday includes new home sales, which economists predict to edge up. I'm Jessica Minton for IB Times TV, reporting from the New York Stock Exchange.